just going to jump right into rates because it's going to be a really busy week. So I'm going to go ahead and share my screen and get right into it. All right, so move everyone over here. All right, so what I want to first kind of go over is the trend. This was the last, well, this was back to September. This is the last year. So it's been a wild ride, right? Like a roller coaster straight down, like a Colossus at Magic Mountain, just that big drop. So a little bit of a rebound here. And then this was when the really bad inflation numbers came out. And we hit like the worst, I think, of the rates back in June. And then we rebounded out of it after the Feds got really aggressive. Then we had some more inflation news. Then Feds got aggressive again, and then more inflation news. Well, the Feds are going to get aggressive again in a couple of days. And remember, I spoke of the numbers for the summer would be the worst because we were replacing really low inflation numbers that were 12 months ago with newer, higher inflation numbers. So inflation was going to peak end of summer, and that's exactly what we got. It's pretty easy to actually see that if you know what those numbers were, because it's a 12-month average, and we were replacing a high number with a very low number. So you know inflation on average was going to go up. Well, guess what's happening? I'm going to show you the economic calendar right now. If you'll click, come on. There we go. This is what's happening for this week. We have a lot going on. First off, with rates, the rate movers are going to be tomorrow morning, the consumer price index. That's the inflation number, consumer price index for most of the stuff, excluding food and energy. So this is going to be the main, the CPI is the main inflation numbers that we look at. And then very next day, we have producer price index, which is another one with everything put together. So we've got a lot going on with inflation. And guess what, guys? It should come in lighter than normal. So inflation is going to be negative for the first time in a long time because of what the Feds have been doing. So the Feds have the way of pulling those levers to make the markets move in certain ways. We are seeing slowdowns across the board, and that's pulled back on the motor that's been burning for a while. So we should see rates get better tomorrow. Now, we do have a 10-year Treasury auction this morning that is impacting rates right now. So we'll see how that really comes through and how that affects everything. But really, the big numbers are going to be Tuesdays and Wednesdays inflation numbers. They're supposed to come in low. Inflation is supposed to go down from 8.5 to 8.1, which is a good sign. However, there's still a lot of work to be done. So I believe in my heart that as long as inflation is going negative and we don't see any other major like monkey wrenches being thrown into the motor, so to speak, I think we've seen the worst of what rates could see. Now, we could see something totally go sideways. That's definitely possible. But the trends are showing us that if we can get inflation under check, then we should be getting out of this mess. And slowly try to see rates that are on the better. So we saw the worst of rates a couple days ago. So let's kind of pull this down to more of a, this was September 6th. So last week we had a really bad day. And remember I talked about these Fibonacci levels, how they act as support. Look at this. It started at this line and went all the way down to this line. And then the next day it bounced all the way up, back up to that line and stuck. It tried to break through, but then went all the way back down. And now we're just bouncing in between. So with some good numbers tomorrow on inflation, we should see rates improve. Now we're up 6 basis points. We started the day up 20 basis points. So we're down a little bit from where we started. I'm going to show you an interesting chart too. Hold on one second when I log in here. So many things to log into. This right here shows the volatility of the day. We started up, came back down, up, down, way up, way down, way up, way down. So this is the bond market in real time. It moves around a lot. So when people are shopping for rates and they say, hey, Sean, what are rates right now? I mean, the rates could change multiple times in one day. And it's really interesting to watch. But overall, we're up a little bit compared to last week. Compared to Friday, we're up a little bit. We're going to see what the consumer price index looks like tomorrow. and we should see better rates. But let's look at kind of where rates ended up on average across the country. We're at 5.97 as an average base rate. So there may be points associated with that. But that's the average across the country on a standard 30-year fixed. So I believe the Monday before we were at 6.25. So we've come down a little bit, but it has been pretty volatile. So we're still high. Let's say a little prayer that the consumer price index comes in negative a lot. Negative a lot would be good. So we can see rates really rebound. So we really want to see it pierce through this Fibonacci level and go upwards towards these the 50-day and the 25-day moving average. So we can see a big jump, because right here, guys, that's a big spread. That's 99.15 to, that's 150 basis points, which is about 3/4 in rate that we could gain and get back if we can squeeze up to this Fibonacci level. So really hoping that the inflation numbers come in low, so we can really see that impact for the week. So that's really exciting. And then also, guys, I want to show you, kind of explain to you a trend that's happening on the pipeline that we have with the pre-qualifications we have. The number of buyers that we pre-qualified over the last year and a half that are going very quickly. So it's incredibly important right now to go back to those people that you've spoken to over the last couple of years that went stale or that decided to rent or whatever it might be, because the psychology is shifting a little bit on people. They no longer expect rates to get down to 3. They're okay, I guess this is the new normal, and they're jumping back in. There's been a lot of people over this year that said, I'm just going to wait till rates come back down. They just didn't understand how they worked. They just expected them to come back down because they've been down for so long. They are all coming back in. Now, are their price points different? Yes, but they're okay with that. And a lot of them are coming back in and say, okay, I guess this is the new norm. Prices are coming down on these price reductions that we're seeing. So now is a good time to enter back into the market. That is happening right now. This weekend was actually pretty busy. I'm not sure what you guys think out there. I'd love to see your comments. But let me know what you are seeing in your open houses. Are you seeing a little bit more traffic this last weekend compared to others? Is it still slow? I really, this weekend was busier than I have been other weekends. And that's a really good sign. So I feel like sometimes I have a good pulse on what's going on with the markets, because I don't have a specific niche that we work with as far as like, we only do jumbo. I mean, I have customers that are single family, nuclear family homes to, somebody just buying their first home and all they could afford was a $50,000 mobile home. And then I've got the super jumbo, people doing $7 million purchases. So I see kind of a good range of everything. And I do feel it's popped a little bit. Still slow, only 4 groups at opened this past weekend. Amy, what price point was that at? $500K. Oh, that's a really good, usually an active price point. Well, hopefully the actions that I'm seeing on people getting pre-qualified and getting their stuff in or having questions for me now will yield to more activity as they start to shop. So hopefully keep our fingers crossed, sailor prayer, that that's a good thing moving forward. But it was a busier weekend than normal for me with people, and most of those people were people coming back in that were already there. So slow open house, 525. That's why I'm finding my buyers don't make offers because they feel like going to pay too much. Yeah. Now I think this quarter we're going to see a lot more people be active, but cautious. So at least their mindset is changing, and that's a good thing. So if they take their time to get out there and buy, that's okay, because at least they're now looking again. And they're like back in mode of like being open to buying again, because they're seeing prices come down a little bit. And if rates follow and get a little bit better as well, I think we could have a better fourth quarter. But I mean, there's a lot that can happen, right? Fourth quarters usually on earnings can be a little crazy. So there could be a lot of volatility with the markets, but at least the psychology of people that are accepting the higher rates, and they're accepting the fact that prices on homes are higher and that they are potentially coming down a little bit, and that's kind of piquing their interest. So let's stay positive out there. Let's keep an eye on that inflation tomorrow, and let's hope that rates can come back down, because we all need a break from the slowness, because we're so used to running with our like chicken with their heads cut off for the last 2 years, that being slow and not having 50 people in our open houses at once just feels wrong. Interesting. I spoke to an agent this weekend, and it's just funny how psychology works, because she mentioned that she couldn't believe that she had a home that was on the market for so long without an accepted contract. And it's on the market it's been on the market, and she's had the listing for so long, she just wants it gone. It's been on the market 21 days. So that's the mentality we've had for so long, that like, if it's more on the market for more than 5 days with no contract, what's wrong with the house? Like, that's what we've been conditioned for the last 2 years. And it's just amazing how our psychology is still kind of stuck on there. Like, wait a minute, it's okay. 21 days on the market without a contract, it's okay. You know, it's a normalized market. So don't lose hope. If you don't have any showings, we're all back to a somewhat normal market. It's very different still, but don't lose hope if you don't have an offer on your house within the first couple of weeks. It will take a little bit longer because we are in a normal market. So it is interesting, but let's hope rates do come down. And I'm mad at you for taking the money off the table. Yeah, I mean, let's definitely use caution. There are some areas that I think have some listings that are priced higher. I mean, I like to look at what's for sale in my neighborhood, and sometimes I scratch my head because there's older homes that need a lot of work, and they're priced still at a premium for ones that are already finished compared to, I should say. So let's just be strong out there and hope for the best, and let's hope that rates do come down, because that could really spur some late year and some early spring activity. So typically at this time of the year, we do see a little bit of spike in activity, and then it slows down a little bit for the holidays. But so Joe asked, what do you see as a target for a good rates? I think if we settle in the high 4s to low 5s, I think that is a healthy spot for rates. If we get any lower than that, it's probably because there's other factors influencing that. But with the Fed slowing down their purchase of mortgage-backed securities and selling them, I don't think we're going to go back to that unless they change their tune and they start buying them again. Let me rephrase that. Start buying them in higher numbers again, because they are still buying mortgage-backed securities, just not as much. But I think high 4s and low 5s is a comfort zone that I would like to fall in. Who knows? There's a lot of unknowns in the market still. So let's just stay positive and hope that they do come down. But remember, marry the house, date the rate. I know it's so cheesy and you've heard it a million times, but it's still 100% better than renting. And we have a lot of rent versus purchase documents that we can put together for you to really portray that on numbers, because numbers don't lie. They're easy to see. They make a lot of sense. So if you have any renters that are saying, you know, I think I'm just going to renew my lease, let me show them how much they're missing out, even with rates being higher, because it is big. All right. Well, I've got a busy morning. I actually have a torn Achilles, so I've got some appointments today I have to get to. But any questions before we head off into this week?
Sean, this is Mike. I got just a quick question.
Yes, sir.
The old school, and you know I came from the lending background, we could say that the average closing costs were $4,000 or $5,000. Now that with site built and manufactured, it doesn't matter. There is points or originations on almost any type of loan you do. So what would you start if you had to just kind of give a ballpark? If a client asked me, well, what do closing costs run? What kind of ballpark would you give? We could give the $4,000 to $5,000 in the past, but it's much more now. So what would you kind of use as a ballpark?
Well, I mean, it depends on if they buy the rate down. Without buying the rate down, most lenders range between $1,200 and $1,800 in total loan costs as the origination fees. That's basically the process and the underwriting fee put together. Anytime somebody comes to me in the price range between the 3 and 500, I tell them it's going to be between 5,500 and 6,500. Tier up like the 500 to 750. You're looking like 6,500 to 8,000. And as you grow up, go up on the scale. But I don't really ever quote anything above like the 9 to 10,000, even on the higher purchase prices like $1 million, unless they're paying points. So I would say the average would probably be around the 6,500 to 7,000 total fees if you include everything. That's including impounds, prepaids, lender fees, appraisals, the whole 9 yards.
Thank you.
Yeah, you got it. Good question. What if a client is not wanting to buy down their rate because they plan to just refi later? That's a great idea. If a buyer is thinking about buying down their rate themselves, I would say proceed with caution if rates do come down. But if the seller's willing to do it, that's a hard question, right? We have to look at what their plans are in the future to see what would make the most sense. Really, the answer comes down to what makes you sleep better at night. If the consumer really would feel better buying it now, maybe that money's worth it to just have a sense of comfort to buy the rate down now. It really just depends on how they feel. Whiskey, yes. Sometimes refinances can be expensive if you're buying points down, but the flat fees for refinance, if you take out the recreation of the impound account, is right around $2,500. So we'll have to see, let's do a side-by-side comparison to see what is best. But that way, I mean, if you're paying it now in this transaction and you're safe with a lower rate and feel comfortable, by all means do it now. If you're a risk taker and you've got the cash flow to mess around, sure, don't do it now and wait till later. It just depends on where your financials are. If cash flow is the most important thing, buy the rate down. If cash in pocket is the most important thing, don't buy the rate down. So really, that's a conversation that's really individualized, but that's a really good question. Feel the rise in the conforming loan limit will affect the market, if any? Not really. I don't think so, because jumbo rates right now are better than conventional rates. So people aren't really shying away from jumbo money. In the past, I would say because jumbo was more expensive and more strict, I would say yes. Maybe it'll put more people into the lower down payment options now because they can do 3% down up to 715 purchase price or 715 loan amount. So yes, for those of you that haven't heard, 715,000 is the new conventional loan limit for Fannie Mae and Freddie Mac. Different counties have different limits, so make sure if you have any questions on how that affects you, let me know. But FHA limit hasn't announced theirs yet, but I'm certain it's going to be going up as well. Usually they're a little later to the game, but we'll get those announcements out as soon as they happen. But yes, it's interesting times. If you have somebody that's capped at a specific price point at like 700 because they needed a 647, 250 loan amount, and now they can go a little bit higher because they only want to do 3 or 5% down, then yes, that could help them. But I don't think it'll make a substantial mark on the markets at all. At least that's my opinion. 2,500 including title insurance and escrow fees. Lender fees and title and lender fees and title and escrow fees. Insurance, you don't have to really, on this for Karen on the refi, you don't have to redo anything else other than title and escrow and the loan fees. A lot of times appraisals aren't needed because you get appraisal waivers. So the loan fees and the discounted fee for refinances is typically around the $2,500 mark. It could be more or less, depending on if an appraisal is needed, but that's usually right around the hard costs. And remember, recreating an escrow account when you refinance is a wash. If you have to bring in your impounds and then you get the money back, it's just a wash. So those are the hard costs. But good question. All right. Any other questions as we go into this week? Don't forget our new 1% down program for teachers, for first responders, and for healthcare workers. Healthcare workers, it's tricky. They have to be a like an RN or something with a designation that they got through schooling. It can't just be somebody that works for a hospital, they have to have some sort of a degree or some sort of an MD or some sort of a licensing for healthcare. And then first responders have to be actively working. They can't be retired. I found that out. So there's a lot of unique parts to that, but 1% down, the mortgage insurance is discounted. It's not just for first-time home buyers, it's anyone, as long as you're a first responder, a teacher, or anyone that works in the education field. You could be an assistant, part-time assistant at a preschool, and you could qualify. You could be a janitor. So anyone in the education, anyone, and then for all first responders that are actively working, all military actively working. Some people have had questions on that, like, well, why don't a military person, why don't they do a VA loan? Well, what if their eligibility is already used? So let's just say they have a home already in the area and they want to upgrade, but they want to keep this as a rental. They can do the 1% down on a new primary, and it may be a better situation for them except for, or instead of maybe refinancing out of this one and getting a new conventional or new VA that way. So lots of new fun things with that 1% down program.
Oh, that's
And,
interesting that it could be anybody in education, but not anybody in healthcare.
Well, it's weird, I know, but hey, you get these new programs, you're excited about them, and then you look at all the idiosyncrasies and the goofy decisions on them, and then you just scratch your head, right? I mean, B of A has a weird one out there right now that's controversial. I don't know if anyone's seen that, but there's a lot of weird programs out there that are specifically for certain groups, and sometimes you scratch your head and say, why me? Why not me? Like, how come they get that and not me? So I mean, I know I wish I could make the rules. I just try to help people when they do have something that could benefit their scenario. I do put it out there. So, but good question. What is the loan amount limit? It's a conventional loan limit. It's a conventional loan, Amy. And so anything up to 715 at this point would be eligible for that. So it's a good program. And what's weird, think about that, a $715,000 loan amount. All they have to bring to the table is like 7,000 and change if they have the other, sellers paying closing costs. It's a pretty neat program. Can you elaborate a bit or send me info on the 1% for healthcare workers? Yes, so I'll send some information on that because it does exclude a lot of people, but basically any doctor, if you're an actual medical doctor or any licensed nurse or accredited nurse is basically it. So it's pretty limited, but yeah, Joe, I'll send that for you. Any other questions? Credit score requirement for nurses for the 1%, it's a, okay. So let me look at that. I believe it is a 640. But don't forget, I have FICOBoost.com. If anyone needs to get credit boosts, go to FICOBoost.com. That's me. It's a registration thing. It'll help people get a free credit review and boost their credit scores to what is needed to get that program. Okay,
Using
yes.
the FICOBoost.com, does that do anything to their credit? I mean, it doesn't pull on their credit, right?
It does. It is a credit pull, but the argument that I have for that is anytime you run credit on a mortgage, anytime you run a mortgage credit pull, it's a 0 to 5 point adjustment to their credit score. That's it. So it could be nothing, or it could be 5 points. But I'm going to share my screen with you to kind of show you what it looks like. I think you guys can see this. It's just a generic fill out your phone number, email, and what are you looking to do, and then I will call that person and run their credit and do a full customer review on their credit to get them where they need to be. So FICOBoost.com. I'm going to be adjusting this and making this a little bit more robust in the near future, but it's one of those things you have to pour a lot of time into. So expect that in the near future as well to be updated. Did you tear your Achilles after watching that Cardinals beatdown yesterday? Very good one. No, yeah, that was pretty bad. I actually started playing pretty competitive pickleball, and I hurt myself playing pickleball, if you can imagine. And For those of you that haven't played pickleball, you can't make fun of me because it is pretty competitive and
Yes, it's dangerous.
there's a lot of running
I
around.
have several friends that have injuries from pickleball. I mean, my sister pulled her gluteus maximus or whatever,
Yeah.
and she was in pain for months.
There's a lot of back and forth, a lot of very quick movements, and if you didn't stretch properly, and you think you're 25 again, like I thought I was, then yeah, you're gonna hurt yourself. So it's just like with any sport, but it's the #1 fastest growing sport of all time. And if you haven't played it, I promise you, you will in the next year. Because I'm having seen people actually trying to look for homes that have pickleball courts as part of their search criteria now. I don't know if you guys have seen that yet, but it's pretty interesting.
One of my buyers is gonna put a pickleball court in whatever backyard they end up with.
Yeah, I mean, it's a really fun sport because it's very social. It's not like I love tennis and I can go to a tennis court and I can ask people to play, but it's weird. So you have to like set it up, find a court, like, and it's usually a 2 to 3 hour span that you play and then it's hard. With pickleball, you show up at any place, you just put your pickleball paddle up on the tubes and kind of wait your turn and you play with everyone. You get to meet new people. It's kind of cool. So it's a lot of fun. It's good exercise. And yes, I am a sucker and I am a pickleball player. So forgive me, but I promise you guys, you won't lose your man card if you play. It's becoming very, very competitive and it's a lot of fun. So, and no, it's not just for old people.
No.
Which
There's
I thought it
leagues up
was.
here.
So what's that?
There's leagues up here already.
Yeah, I mean, it's fast growing. So if you haven't played it, go out there. It's a lot of fun. It's a real social event. A lot of fun. So anyhow, I digress. But all right, guys, I got to get going to my appointment, but you all have a fabulous, fabulous week. And if you need anything, then I will always be here to help.
Okay, good luck at your pickleball game.
Yes. We'll talk to you guys soon.